Well, investors have a lot to think about these days. Hopes surrounding big interest rate cuts are often clouded by sticky inflation, as we saw with Canada's hotter-than-expected price print this morning. And yet, the stock market, particularly the U.S. market, has been chugging along. A lot of that is tied to the AI excitement that briefly made NVIDIA the most valuable company by market cap. But after tech's big gains, some bears are starting to warn about bubbles. So how should you think about the investing roadmap from here? Let's ask O'Leary Ventures Chairman Kevin O'Leary, of course, well known for his work on Shark Tank, on Dragon's Den, and here on BNN. And he joins us here in studio. Nice to see you.
Great to be here. Thank you.
It's kind of an interesting moment after a big year in the stock market for pause. Almost feels like a pause and resetting. What's been your sense of what's going on in the market?
Well, I think there's two positive forces. And probably one negative. So on the positive side, you have evidence now that AI does provide productivity beyond tech, so it's going to affect all 11 sectors of the U.S. S&P. Everything from insurance, financial services, every single sector is touched by AI and cost reduction. That is evident and it's real. So it's not really bubblish in the sense that it's like pets.com was years ago. This is real technology that has a very good effect on margins. And then you've got a 50-50 chance of changing the administration in the U.S. to a more accommodative for business, which would be less regulations, corporate tax rates between 15 and 21, and generally speaking, at the federal level, more positive on energy. And so you don't know, but it's only weeks away, and the polls look 50-50, so it could go either way. If you look at small cap stocks, which are a real index of the U.S. economy, they've been very buoyant of late because it looks like many people believe that Trump will be successful. And for the next 4 years, kind of a renaissance period for businesses that are just based in the U.S. Remember, they don't have FX foreign charges or anything. They're just dealing with the U.S. economy. On the negative side, it's clear we're not getting any tax cuts this year. And people just kept thinking, well, remember, only 18 months ago, we were talking about 7 rate cuts in a row. Yeah. We got none of those, and we may not even get any. And there's some chance we may have to tame inflation with a further rate hike. And so the market's trying to deal with all of these forces at the same time, but 2-to-1 on the positive.
So what about just the idea of assets that increase in value very quickly? Because just the NVIDIA story alone has sparked a huge debate over that. When a stock goes up as quickly as it goes up, even if the AI opportunity is enormous, how does that sit with an investor? And then commonly we'll hear, well, look at how quickly they're growing their bottom line, the earnings story, and look at how much the company trades at versus the earnings power. When you look at the debate taking place in the market, having gone through many investing cycles over the years, yeah, what comes to mind?
Well, that narrative was the same 18 months ago about NVIDIA, when it, was whatever hundreds of percents below where it is now. They have a moat around them because it's not just firmware. They have the software and the firmware inside their chipsets, and they keep advancing the new generations. It used to be every 24 months, now it's 18 months, and they've just told the market it's going to be every 12 months. And so that kind of geometric increase in productivity is being rewarded by the market. And I don't think it's necessarily overvalued when it's basically, in order to do AI now, you have to go into their moat. Now, that may change in the next 3-4 years because, as you know, billions are being invested by competitors like Amazon for new chipsets. And Amazon is cutting some deals overseas right now for new data centers, even though they haven't delivered their firmware or their chips yet. So when the market sees that for the first time and these chips become more of a commodity, you'll get a correction in PE for sure. But I don't see that coming in the next 2 or 3 years.
And so when you think about portfolio strategy, because I think there was a point recently where it felt like investors were broadening out their exposure in the stock market. Then they kind of hit the pause button on that. We saw that reflected in the TSX performance as well. Yeah. What do you think the outlook is for everything that's not NVIDIA, everything that is not the biggest of the big in tech?
Well, even if you're a diversified indexer, you're still over-concentrated in NVIDIA now, just in terms of what it's worth to the S&P. But that's why, if you're arguing that through, it really has an effect beyond tech. And so maybe it's right that it's such a massive component in the index because it affects all the other sectors in such a big way. I was just looking at a watch insurance company, just for watches, jewelries and watches. They're cutting their costs of actually underwriting contracts by 30%. By scraping data off the market on pricing on jewelry and watches every 24 hours using AI. And it's not that complex a data stack. So you're able to eliminate hundreds of people that used to touch these and look at jewelry and go look online as people, and you get rid of them now. And you do it specifically within a nanosecond by just scraping data. I know right now what a Rolex Daytona sold for yesterday in Hong Kong, like that. So you can underwrite market replacement value within a nanosecond. And so you couldn't do that 18 months ago. That's pure AI stacks.
So coming out of the pandemic, everybody wondered if we'd get our roaring 20s. Is it the productivity boost we get from AI that could be our roaring 20s? Yeah,
it is. But, AI is interesting with the derivative markets that I'm playing. Data centers, we only have 8% of the data centers we need. So unfortunately, Canada is not participating in this explosion of data centers. These are $3.6 billion projects. And if you have hydropower, gas, or nuclear power, as at least in Canada, we've got hydro, we've got gas, you should be getting your fair share of those projects, but you can't get permitted in this country. So they're going to North Dakota, West Virginia, Oklahoma, Texas. Those kinds of states are getting these massive sovereign wealth projects.
And that's an area that you're investing in?
I'm very excited about it.
We
We looked at Alberta, but unfortunately you can't get anything done there because the federal government controls the permitting of energy, and they haven't done anything. Well, as you know, you can't get anything done. I don't want to be critical, but it's just not worth your time when you can go to North Dakota, get a permit in 6 weeks, or in Oklahoma, where they've got wind, they've got gas, and you can service the Canadian market from just south of the border in North Dakota and get the deal done. A $3.6 billion project just outside of Fargo with fiber optics should have been near Calgary. Ain't going to happen. And I'm very critical of the Canadian government, obviously, but I just watch it happen every day. All that money being diverted away from this country. It's such